So the profit and loss statement or the profit and loss report is a report you can run that shows the income and the expenses for a particular date range. Now, most software providers provide this on a monthly basis and some on a quarterly and an annual basis as well. I'm going to show you and run through a profit and loss report in Xero, but it's exactly the same as MyOb or any other software that you might use. So let me share my screen. So here we've got the demo company of Xero, and what we're going to look at is the profit and loss statement. So the profit and loss statement is all of the income and all of the expenses for the business that are not asset purchases or liability payments for a particular period of time. I'm just going to run through last month. So you can see with Xero, we've got an option to choose this month, last month, or month to date, this quarter, last quarter, or quarter to date, this financial year, last financial year, or year to date. And it gives you the date ranges based on the period of time that you have set up in your settings, which is your start and finish date of your financial year. So looking through, if you haven't finished the month, then you can either go this month or month to date, and it's exactly the same report. And your last month should be, if you've got everything reconciled, the numbers in here. So what are we looking at? So first of all, we start off with the income. So these are the things that you have sold, and your profit and loss is excluding GST. So please note that your sales here, the income coming into your bank account, is including GST if you're registered for GST, but on this profit and loss report, it shows as excluding GST because your GST is sitting over on your balance sheet that needs to be paid at a later date. So this is what's excluding GST. Now, your profit and loss report is shown on an accruals basis and not on a cash basis. So what does that mean? Not only are these sales excluding GST, but it's not even the money that's coming into your bank account. The sales that are showing on your profit and loss report are purely the invoices you've sent out, regardless of being paid or not. So your profit and loss is on an accruals basis, which means paper basis, not cash basis. Is excluding GST. So we've got our income coming in, our costs going out. So our cost of sales or our purchases, our direct costs, whatever you want to call those, are the things that we have to pay for directly out of sales that go up when sales go up and go down when sales go down. Then we've got our other income. So in this particular report, it's got interest is other income, which is absolutely correct. It's not a sale. It's not a purchase either. Then we've got our operating expenses. So our operating expenses are the things that we're spending on our business that have to be covered by everything else, all of our profit in the business. So we generally find that for most businesses, the majority of things you're spending your time coding when you're doing your data entry are these operating expenses codes. Now, this listing is for the month of July, and it runs through all of the different costs that have been input into the system. Yet again, not necessarily paid, but sometimes they do match. All of the things that we've bought that are excluding GST. So we can see advertising, bank fees, cleaning, blah-de-blah-de-blah. So the thing with the profit and loss statement is it has to make sense not only to the person doing the data entry, it also has to make sense to the person who's reading the report, which is you. So if there's something that doesn't make sense to you, you need to fix it and request it to be fixed. So things like light, power and heating generally don't mean much to many people at all. And depending on your climate, you may or not even need heating. So it might be electricity costs rather than light, power and heating. You can change the name on these. Similarly, you want to make sure that you're not overcomplicating your profit and loss statement and putting too many line items in. At one stage back in my past of being an accountant, I printed off a profit and loss statement for one of my clients, and it was 5 pages long. Now, I didn't like reading it, and neither did the business owner. And so he just didn't look at it at all. And what had happened was over the years, people had started breaking down the profit and loss statement to the minuscule details so that there was a line item on the profit and loss statement for every single telephone number the business paid for. Now, for the most part, telephone bills are generally the same amount each time. And so having a telephone number on the profit and loss for every single telephone number that the business paid for, and there was about 11 or 12 from memory, it just clogged up the data and you just didn't want to read it and it didn't make sense. So for things like telephone, if you're paying for 12 different numbers, don't break it down. Not only is it going to confuse you and not want to read your profit and loss statement, but it's going to make it harder for the person doing the data entry to get the allocations right. So let's make it simple. Anything to do with telephone and internet all goes into the same account number, makes coding easy, makes checking easy. And then if you do need to clarify it, you can click on the number and it opens up and shows you exactly what it is that's made up of that number anyway. On the flip side from the accruals version of this profit and loss is the cash version of the profit and loss. And I'm going to leave this screen open and show you the cash screen side by side. Hopefully it works okay. By clicking on the More button here in Xero, we can click on Cash. In MyOb, you're going to run a new report and it's called the Cash Profit and Loss. It's a simplified tax system, small business report. Anyway, update that one and we can see the difference. So July, with a cash basis, sales are 7,950 compared to 20,947. So the difference comes from timing. Like I said before, the profit and loss statement here, the accruals version, which is the right version, this one has all of your invoices. And then this one, the cash basis report, only has the money that's been banked in your bank account in the month of July. So the bankings were slow for July. Invoicing was good. So hopefully for August, we'll have a higher amount in here in the cash basis report because all the money from July is now being shown or collected in August. So it's really important to understand what you're looking at when you're looking at your profit and loss report. Are you looking at the paper version, the invoices side of things, or are you looking at the cash side of things? Now, when we're looking at our bank account, we don't see either of those. Nothing tallies nicely. It just shows us a running balance of who's paid and what we've paid versus this report, the profit and loss report, which tallies up in the different categories. So if we have a look at the profit and loss at its total, our total income is 7,950. We haven't spent anything out in purchases as per the other screen. Our interest is the same. We don't send an invoice out for interest, so that will always be the same. We show the interest as income as soon as it comes into our bank account. And then we look at the other expenses. So expenses running through, when we compare it to the other one, advertising, 2,272. No advertising here at all. So there's been a bill entered in the system for advertising that we haven't paid yet. Fees of $300 are the same. Yet again, we don't send an invoice out for bank fees. They just take it out of our account. And as soon as they take it out of our account, they're recognised in our profit and loss statement in both the cash and the accruals version. This one, the accruals version, shows total expenses of 24,000, total income of 29,470 with a couple of little adjustments in there. So a net profit, actually a loss. So our income minus our expenses gives us a loss. So we've spent too much on this one of 4,176 versus our cash report. Income coming in of 7,950, costs being spent out of 22,405, gives us a profit or a loss, in fact, of 14,358. Now, it's really hard to know what's going on with this business because we're only seeing one part of the story. We're only seeing the profit and loss, and we're definitely not seeing the rest of the story. So we're seeing the cash side of things, which we've spent way more money than what's come in. We've seen the accruals version of the profit and loss, which says we've invoiced nearly 21,000. We've spent out 24, so we've made a loss of 4,000. So a $10,000 difference there. The rest of the story is the balance sheet. So with our sales, we've received in 7,900. We've invoiced out 20,000. Our balance sheet should show an increase of debtors. Let's go to July. So our accounts receivable would have increased over that period of time. From 10,000 at the end of June to 25,000 at the end of July. And so that makes sense because our income has gone up, where our income was 20,000, but our cash received was only 7. Now, it's not going to be an exact science where it's going to match exactly because cash that was received in July might have been for June, or it might have been for July, or it might have been a mixture of the two. So we can't exactly calculate it just from looking at those reports. So the next report to look at, we may be able to, which is our accounts receivable report. Or in the workbook, I call it the debtors and creditors report. So it depends on which jargon or which terminology you want to use. Receivables, payables, those sorts of things. End of last month, what does that match? So all of the bills that we'd sent out, or the invoices that we sent out during the year, 18,000, one that's a month old and a couple that are a few more than a month old. So this is where understanding the timing of your profit and loss statement and your cash reports can really come into play. Because if you've got a whole load of money sitting in your aged receivables, so people who owe you money, who haven't paid you or won't pay you, then you're never going to receive the cash and see that in your cash profit and loss or see it in your bank account. And then similarly, with our aged payables, which are our bills that we haven't paid yet, we want to make sure that we're paying them and what's being reported actually makes sense. So it's good to check in here that you've got no duplicates, that there's nothing in here that has already been paid in one way, shape or form. And it's making sure that you understand that there's $6,000 worth of bills on the accruals profit and loss haven't been paid in this operating expense on the cash profit and loss. Now it was 22,000 versus 24,000. So there must have been on our balance sheet a similar amount of bills, accounts payable, in the previous month. So it's only gone up by 5,000, whereas receivables have gone up 15,000. So a cash basis report like this one here is really good for small businesses who don't have debtors and don't have creditors. They're operating on a cash system, so small not-for-profits, that sort of thing. If you send out invoices to your customers, then you will want to run your profit and loss reports and track your income this way, and make sure you're checking your debtors and your creditors report and following those up and matching them when those payments are coming in and going out. So hopefully I've explained well enough that your profit is not your cash. $20,000 in sales versus $7,000 received in your bank account as money in. The profit is not your cash. But when you do make a profit and when you do receive cash in, it's not just these expenses that you spend your money on. You also spend money on balance sheet items as well. For example, there's some unreceived cash here in your credit, in your debtors or your accounts receivable. And we saw that with your sales going up in the accruals version and down in the cash version. So it shows that it's going up in the balance sheet. You can also spend some of your money on fixed assets as well. So here we've spent a bit of money on office equipment. Where does that show in the report? We've spent some money on computer equipment. Neither of those show on the profit and loss statement. They're showing out here on balance sheet. We've purchased new assets and they're being coded as assets. There's some cash tied up in your accounts payable. In fact, we've made money because we haven't spent it on our bills yet, which is a good thing because we didn't have enough money to spend it on bills. And this business bank account as a liability, is a bank overdraft. So we've actually drawn $10,000 more out of our bank overdraft than what we did at the end of the previous month. GST is a little bit changed. This historical adjustment, if you see that on your profit, in your balance sheet, then please be aware that that is not a real figure. And then your pay-as-you-go withholdings, that's wages tax that you've accumulated. And if you pay it, it goes back against this liability account and it does not go on your profit and loss. So it's money coming out of your bank account that's paying off a debt. It's not money coming out of your bank account for an expense. In saying that, wages and salaries that are showing on your profit and loss are inclusive of the pay-as-you-go withholding, inclusive of the tax, of the wages tax. So $13,400 is not the net amount of wages after tax, not the amount that's coming out of your bank. What's showing on your profit and loss is the amount that you've paid for wages plus the pay-as-you-go withholding that's already showing on your balance sheet now. So be mindful that just because it's on your profit and loss account doesn't mean you've physically paid it either. It's assuming that you've paid pay-as-you-go tax, but most people don't. So when you do make a profit, this one here hasn't, but when you do, then there's three things that you might do with it. You can accumulate assets, whether that's increasing cash or increasing or decreasing your accounts receivable and fixed assets, so you're buying things in the business. You might be paying down some liabilities, whether that's the short-term liabilities or whether it's long-term loans, or you could be paying the owners. And so if there's dividends to be paid or drawings to be taken that you're taking out of the business, then they may be shown down here in the equity item as a dividend paid or drawings or something similar to that, depending on your business type. So we're not just looking at one report when we're checking your finances and understanding your financial reporting position. We have to look at a lot of reports and understand what each one means. And using that comparison between what happened at the end of last month and this month, or the end of last year and this year, you've got a better understanding of what's happening in your business and how you can make it happen. Hopefully, profit and loss trading makes sense. We can do a deep dive into your business if you really want help in understanding exactly what your numbers mean. Let me know.